After Donald Trump announced a tariff sweep, there was a massive sell-off with the S&P 500 losing $5 trillion in just 2 days, and the tech-heavy Nasdaq fell by 22.7% and Dow Jones fell by 5.50%. Looking at the S&P 500 heat map, you can see that all stocks plunged towards the downside. This tariff war have been of huge impact to investing, or even to my investment portfolio. If you're someone who is just starting your investment journey, this could be a negative sign which can mess up your strategy or your plans. But if your investment strategy is for the long term, this crash could actually be an opportunity for you to buy more shares. Crashes are normal and are bound to happen. The market goes in phases, making a higher high and a higher low. A good investor takes advantage of each price drop. It's an opportunity for him to buy more, taking advantage of the volatility of the market. So in today's video, we'll be discussing 3 key points: what is happening and why is the stock market crashing, what you should be doing, and what you should avoid. What is stock crash? According to Investopedia, a stock market crash is a rapid and often unanticipated drop in stock prices, while finance strategists define stock crash as a sudden and steep decline in the price of individual stocks that leads to a market-wide decline. Yesterday, we saw a 6% decline on S&P 500 at the beginning of the London section and 2 to 3% decline in the previous week. One can ask, seeing the decline, that what are the signs? How do you know that the stock market crash is happening? You can spot a stock market crash when you see a double-digit decline. Double-digit drop is when the market index drops so deeply than anticipated. Example, Black Monday, October 19, 1987, Dow Jones dropped by 22.6% in one day, and the COVID-19 crash, March 16, 2020, S&P 500 fell by 11.98% and the Dow Jones fell by 12.9% in just one day. And the financial crisis, October 15, 2008, the S&P 500 dropped by 9% in just one day, and with a further decline in months. Speed of decline. Given a short period of time, all stock market crash have witnessed the loss of substantial value. For example, on May 6, 2010, within roughly 36 minutes, Dow Jones nearly dropped 1,000 points, which is approximately 9% drop in a very short period. Increased number of margin. When you buy a stock on margins, meaning you borrow money from the broker in order to make a trade, when the stock price crashes, your brokerage account balance threatens to become negative, forcing the broker to close the position. And when a broker forces a trade to be closed, the position is sold, which in turn drops the stock market price. What is causing this turbulence in the market is what the United States President Donald Trump called reciprocal tariff, and this is a major weapon which the United States President wants to use to achieve all his promise for better America. More than 60 countries that import goods into the United States are affected, from China, Mexico, Canada, Vietnam, India, Japan, a whole lot of them. Affected countries are waiting to react by adding additional tariffs to US exports, which we might see in the coming weeks. And as much as this tariff is very high when compared to US data, this could be a negotiating strategy which the US government wants to use to attract companies to come and build manufacturing plants in the United States. And some companies has followed suit, like the likes of Apple, the Lilly, the Honda, promising to invest huge into the United States. But setting and building industries takes time or years. This is why I believe that the US government, after seeing the response from companies and how they react to the tariff, they will come to a common ground where they will bargain and come to an agreement to get things into normal, because we can't really continue like this for a long time. But the problem here is, what will you do while waiting for the rebound, for things to get better? First, what you don't want to do is cheating yourself, because you hear that the stock prices are very cheap. You went in with all your savings or even borrow money to buy the dip. This is a gambling mentality, as nobody knows when the stock market will start its bullish move. What you don't want to do is selling your shares early because of a car breakdown or any medical bill. This is why you need to get your finance right by setting aside an emergency fund for any eventuality. Second, you need to stay consistent. At the beginning of this year, there was a lot of speculation that the stock market is overvalued, that the S&P 500 is overvalued. That was why some people are a bit skeptical in investing their money into the stock market. But if I can ask you today, is the stock market overvalued or undervalued? See, the point I'm trying to make is that there is no time the media or people are not selling panic stories. You need to learn how to treat your emotions right, because this is what will only get you to that top 1% that will see this market crash as an opportunity. If your strategy is investing every week, stay consistent to it. If it's every month, if it's every 2 weeks, if it's twice in a week, keep on buying and maintain the momentum. Or if you want to play it safer, you can reduce your capital. For example, if you're investing £100 weekly, you can reduce it to £60 or £70 to keep your mind relaxed. After all, you need to be stress-free and enjoy your life. Thirdly, revisit and rebalancing. What you want to be doing is to revisit your portfolio, adjust your risk tolerance if need be. No matter how diversified you are, there will still be a US stock, either as an individual stock or as an ETF. You can rebalance or reduce the weight of capital you have in individual stocks. I'm not saying that you should sell your stocks or your shares. No, what I am saying is, for example, if in your investment portfolio Apple has 5% of your capital, you can reduce it to 2 or 3% depending on what you're comfortable with. This will reduce the volatility in individual stocks. And also, investing in ETF, in global ETF, help reduces your risk at a BRS minimum. What you need to avoid is panic selling. What you need to know is that the stock market is not done yet. There is still a bearish potential because other countries are yet to respond to President Donald Trump's tariff to counter the tariff by adding their own tariff to US exports. And when this news comes out next week or a week after, we might see a heavy bearish movement which can scare a hell out of you. For me, I've already have it in mind that every day is a downtrend. I don't care what is happening in the market. I don't check my portfolio. I don't care whether the market goes up or goes down. I've already done the hard work by setting an auto invest every week. Let the market do its thing. No emotional decisions, no panic selling. I believe if we stay in this course for 3 to 6 months or even to the end of 2025, we will reap the profit from the stock market. Let me know in the comment section how you are approaching your investment this period, and don't forget to like and subscribe to this channel, and I'll see you all in the next video. Much love.